Welcome to Sales, Tax, and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, I'm Mike Fleming, founder of Sales, Tax, and More, and today's host of the Sales, Tax, and More podcast, where we talk about everyone's favorite topic, which is, of course, sales tax. And we've got a phenomenal guest today. His name's Scott Peterson, and Accounting Today actually named him as one of the top 100 most influential people in accounting in 2018 and 19. And we're going to discuss the Wayfair case, where we've been, where we are, where we're going. Before we start, though, I want to share a little bit of information about Avalara. That's where Scott currently is employed. You all have varying levels of familiarity with Avalara, so I'm going to bring everyone up to speed very quickly. They're a leading provider of cloud-based tax compliance solutions, and they help businesses of all sizes, and they help them achieve compliance with transaction taxes, including a sales and use, VAT, excise, communications, constantly adding new tax types and services. Solutions are designed to be very fast, accurate, and easy to use. And their vision is to touch every transaction in the world. It's a great vision there. I was amazed, Scott, trying to look back at, prepare for this, how long I've actually had a relationship with Avalara, and it's 10 years now. So time flies. So I've seen Avalara grow, and I'm just amazed at the quality of services that they put out there. And by the way, Avalara is now a public company. They trade under the symbol AVLR. They went public back in 2018, and they've almost doubled since that time. So a lot of growth, a lot of good things going on there. And Scott is the Vice President of U.S. Tax Policy and Government Relations for Avalara. But prior to working for Avalara, Scott was the first executive director of the Streamlined Sales Tax Governing Board. And prior to that, he was the director of the South Dakota Sales Tax Division. So Scott's truly an expert. I mean, with Scott, you get a perspective that we don't often hear. And on top of that, he's a real great guy. So, Scott, you want to say hello to the audience?
Hey, everybody. Thank you, Mike. I appreciate the introduction and the nice things about Avalara. Yeah, I'm with you. I met the founders back in 2004. So even though I've worked for them for 7 years, I've known them for what now is it? Gosh, going on 15 years, 16 years.
Yeah, it's amazing how they've grown, and how much they've added and how many people they're helping. I'm just truly amazed myself. So anyway, let's talk Wayfair. I mean, talk about changes. You've been around for a while. How did Wayfair come about? Why don't we start there?
Okay. Yeah. I have been around for a while, because I remember I worked for the state of South Dakota when the states were trying to get back to the Supreme Court the last time in 92 in the Quill versus North Dakota case. Mm-hmm. There was a lot of rivalry between South Dakota and North Dakota then. South Dakota was mad that they weren't the case the state that got picked for that lawsuit.
Well, they got picked this time.
Yeah, it's kind of weird. It's really quite weird. You have the two Dakotas, two tiny little states that are lawsuit driven apparently. But so the Supreme Court's decision in 1967 and then again in 1992 created this world where retailers got to plan where they're going to be sales tax compliant. You knew before the Wayfair case that you were going to have to know something about a state sales tax when you put an employee in that state or when you open a store in that state. Those are all decisions that you, the business, got to choose. I mean, you got to know what you had to know because you made a conscious choice of what you needed to know. Wayfair, when the Supreme Court simply said that the physical presence test that everybody relied on for 50 plus years was wrong, completely overturned the apple cart, but it didn't really leave anything in its wake. I mean, so, in 67, the court created the bright line test of physical presence. Well, when they got rid of the bright line, they didn't leave any line at all. And all anybody was left with is, what the South Dakota law said, which is if you make more than $100,000 in sales or you have more than 200 separate transactions, you got to collect sales tax. That's not, I suppose that's a bright line. Yeah. And it certainly could have been a bright line had the states decided that they were going to follow that exactly. And the downside is that, in the 18 months since we've had the Wayfair decision, we've 43 states today have adopted something similar to the South Dakota law. In a couple cases, it's exactly like the South Dakota law. In many cases, it's only similar to the South Dakota law. So we go from a world where you, the retailer, you, the business, decide where you're going to collect sales, or where you're going to collect sales tax because you decide where you're going to be physically present, to a world now where customers decide where retailers have to collect sales tax because it's that marginal sale that person that you sell to in South Dakota that takes you over $100,000 is the person who's chosen that you need to understand the South Dakota sales tax.
Yeah, absolutely. And we're still seeing this evolve. I mean, a lot of companies a lot of states played follow the leader and jumped out there with $100,000 and 200 transactions. But lately we've been seeing, move away from the transactions in a lot of states, states like Washington, California, they've done away with their transactions. Now, we've got a bill in Florida that it looks like they're going to include transactions as part of their thresholds. And we've got a bill in Missouri. Those appear to be the last two states without transaction thresholds, where they're not going to have a transaction threshold. So do you think that transaction thresholds are here to stay, or do you think that eventually they'll go away, or you just don't have a crystal ball?
I don't really have a feel for it, but if I were going to guide state tax policy, I've been doing that for a long time, I would encourage states to get rid of the transaction things. It creates the Supreme Court in the Wayfair decision said, physical presence created an anomaly. You could be the world's smallest retailer and have to collect sales tax everywhere because you had to be physically present to do what you do. Whereas the world's largest retailer wouldn't have to collect sales tax anywhere because they never have to be physically present anywhere. Well, with transactions, you get kind of the same thing. We've got a customer that sells things that cost 75 cents and they sell lots and lots of them. But there are a bunch of states where they never exceed the dollar threshold, but they blow through that 200 within the first month of the year.
Yeah.
So these are folks that are going to remit, into South Dakota or Wyoming, they're going to remit, $400 or $500 in sales tax through an entire year and never exceed the dollar threshold, but, just go way past the actual transaction. So you have individuals. And at some point, there needs to be, at some point, we need to go back to the balancing act the states used to have, and probably still have for certain types of retailers. If you're physically present inside of a state, but you were just too small, a lot of states would say, pay sales tax on the things you buy, and when you get big, you call us, and then we'll give you a license, and we'll do this the right way. They did it based upon the amount of sales. They kind of did a cost-benefit ratio analysis on, okay, it costs us $4,500 to get somebody licensed, educated, and to keep them compliant. Well, if you aren't going to collect $4,500 in sales tax, you're not worth the effort. It's a rational thing, perhaps. I think, and at least I hope that the transaction thing goes down that same cost benefit analysis, because there's going to be a lot of people that remit practically no sales tax at all at the end of the year.
Yeah, absolutely. And like you were saying earlier, the U.S. Supreme Court didn't come out and explicitly say $100,000 or 200 transactions was acceptable. For South Dakota, they sort of said, seems like it makes sense, but they sent it back to the lower court for it to be decided, and they settled the case before that was actually decided. So do you anticipate, more lawsuits along these lines?
Yes. And for a couple of different reasons, I think the transaction thing is maybe a place that people could rest their hat on a lawsuit, because truly we're going to have people who are paying somebody paying either an employee or somebody like Avalara to do sales tax compliance for them, and the cost of compliance far exceeds the tax that gets collected. So in that point, then maybe you've got an undue burden argument. Maybe you can go to the Supreme Court and say, I get it. If I were big, this would make perfect sense, but it costs me more to file a return than the tax that I remit on the return. That doesn't make any sense. That looks to me like a burden. And is it an undue burden? Who knows? If I got to do it in 25 states, maybe. There are other areas where we have these really, we have states today that are treating in-state retailers better than out-of-state retailers. An example is Illinois. Illinois, origin sourcing state. If you're an in-state retailer, you collect whatever their
retailer's occupation tax.
I wish they why can't they just have a normal name? But if you're not a state retailer, you got to collect the state use tax.
Right.
You may believe there's going to be situations in there where the out-of-state retailer collects a higher tax rate. And the same thing in Tennessee. In Tennessee, where I live, the legislature adopted a law that said if you're an out-of-state retailer, you got to collect on destination. In-state retailers collect on origin. And while every spot in Tennessee has a local sales tax, there's lots of spots in Tennessee where the local sales tax rate, it differs from each other. It can be 9.25% or 9.75%. I mean, you could have an out-of-state retailer having to collect a higher rate and spend more money doing the compliance than you do an in-state retailer. So I think those two areas are I think maybe not quite ripe for a lawsuit, but I would think they're going to come along sometime.
I'm not sure if you're familiar with this. Amazon just created a mess along with Illinois with the marketplace facilitator laws. So Amazon is a marketplace. They need to collect tax from their third-party sellers or on behalf of their third-party sellers and remit it to the state of Illinois. But Illinois, in their infinite wisdom, just assumed that all of these marketplaces are outside the state. So they've got to collect the use tax and remit that to the state. And, Illinois came out the other day and they said, if you have inventory in an Amazon warehouse, you're subject to the retailer's occupation tax. And, you can't recoup it from your customer because Amazon's already collecting the use tax.
Yep.
So now the tax is getting paid, basically double taxation. A use tax is being paid and a retailer's occupation tax is supposed to be getting paid. So to me, that's absolutely ludicrous. So
yeah, we've been studying that. We're trying to see how we help people deal with that. It's complicated. I mean, it's whew. Yeah. So it seems to me that Illinois ought to be a pretty easy target for somebody that wants to, start another lawsuit. Maybe we go back to where we started. Remember, Bellicese versus Illinois.
Full circle. That's lots of problems out there. So, what do you think? Where do we go from here? What are you telling people? What are you hearing from your contacts at the states? What do you think the big takeaways are?
Well, the big takeaway is that they're getting more money than they ever have, and they think it's working. I'm surprised at how quickly my friends at the states have created a new normal. And they just think, oh, well, you're a marketplace seller? Okay, that's fine. This is what we do. oh, you're a remote seller? Okay, that's fine. This is what we do. You're a marketplace? That's fine. This is what we do. Without giving 1 second's thought to how those two things interact with each other and how they're different from their neighbor.
Mm-hmm.
When we created the Streamlined sales tax, the whole point of that was you're different from your neighbor. Why? And can't we fix that? Because that difference is creating chaos. Well,
yeah.
Now we're back to the same spot. We've got people with different thresholds for sellers, different threshold for marketplaces. Some of them require the marketplace seller to include their marketplace sales in their own threshold. Some of them don't. Some of them allow you to exclude sales for resale. Some don't. But the states are all thinking, well, I know what my law is. We're good.
Yeah. Hey, and they've taken Wayfair has really taken away a lot of incentive to get the states all doing the same thing.
Yeah, and that's when I was the last few years I was with South Dakota, and then the 7 years I was with the Streamlined sales tax. I lobbied Congress, and one of my jobs was to lobby Congress to get Congress to give states this same authority they got into the Supreme Court, but with conditions.
Right.
And no one for a second thought we'd have the Supreme Court take this case again and make a decision, as broad as they did. So throughout this whole, last 15 years, all anybody's ever thought about was, okay, states, you may get this authority someday because Congress is going to let you have it, but they're going to make you do A, B, C, and D. Mm-hmm. And A is uniformity. You got to do it exactly the same way. And now the states have stopped lobbying. Now they lobby Congress the opposite way.
Yeah.
Okay, it's okay. We got everything's under control. Trust us. We can deal with this in a rational way.
And we hear from a lot of sellers out there, a lot of e-commerce sellers, and actually, other people who have this new economic nexus, that they're waiting for Congress to do something. They're not going to move. I mean, they know what the risks are, but they're still not going to do anything because they believe Congress is going to step in and come up with some sort of uniformity. Yeah, you can say it. I can't. But make life easier for them. I just don't see it happening anytime soon. I just don't think there's an appetite for it. Are you seeing anything different or?
No, and we follow what the people in Congress are doing on this issue, and for the last year, there's a small group in Congress that wants to hold a hearing. There is legislation pending in Congress, but it's in committees where the chair of the committee likes the world the way it is, and which was the problem that the states had before when there was somebody else in charge of those committees. So now all they're talking about is holding a hearing. And I just the last Friday I was part of a conversation where the Senate is thinking about holding a hearing. But that is simply just that. They're going to get together. They're going to get some people from one side and people from another side, and they're going to talk about how things are going.
Yeah. And we've seen this happen how many times over the past couple of years? Main Street fairness, marketplace fairness. All they do is talk.
Yeah. So actually, from a congressional historical perspective, it's, the Senate back in 2013 adopted the Main Street Fairness Act. They had 67 votes. Mm-hmm. And sent that over to the House. If I were a retailer out there thinking, Congress is going to save me, I'd look at that 2013 vote and look at the 67 senators that voted for that piece of legislation. Almost all of them are still in the Senate. Mm. Now so all the people that thought that was a good idea and that what the Supreme Court did was a good idea in 2013, they're still in the Senate. So,
yeah. So that bill would not have saved people. That bill would have done pretty much exactly what the Wayfair case did.
Yep, it would have done exactly the same thing. There'd be more uniformity, and that's about it. But I don't think Congress is going to save anybody.
Yeah, I bring up the Northwestern Cement case and how we got Public Law 86-272. Congress came out and said, hey, this is a temporary solution. We got to form committees and study this. And that was in 1959. We still have this antiquated temporary solution out there. So on some topics, Congress has been do nothing for a long, long time.
Yeah. Yeah. And I feel bad. Frankly, I really feel bad for businesses. Public Law 86-272 was probably perfectly crafted for its time, but it protects almost no one now. I mean, goodness. And then the analysis is so complicated to determine whether or not you can not have to file an income tax return in the state. You got to do some pretty serious gymnastics.
Absolutely. And now, for some of these companies that have a pure economic nexus, it may apply. But now you've got states like Oregon coming out and saying, okay, we want a piece of this. We don't have a sales tax, so we can't get our income tax to work, but let's create a gross receipts tax so that we can join the party also. What do you think? Do you think we're going to see, states play follow the leader behind Oregon? And
I don't know. So Ohio kind of started this with their CAT tax, their commercial activity tax. And it's funny though, Oregon calls theirs a CAT tax. It's the same, two different states, two entirely, different historical and political backgrounds. They both do the same darn thing. Well, they both do something very similar, but in the last 10 years, that Oregon tax is the only new state tax. We've got San Francisco's got something, and either Philadelphia or Pennsylvania has something like that. But we haven't seen much.
Just added an economic.
Thank you, it was Philly. So I haven't seen much effort in the state side. What we are going to see on the state corporate income side is, there's been a 25-year movement away from the old three-factor formula, payroll, property, and sales, to just sales.
Right.
And, every state is moving that direction. And I don't know how you have, if your corporate income tax is apportioned solely on sales, I think you have to have an economic nexus test. I think it has to be economics. Otherwise, what's the point of having sales as your only apportionment factor if you're not going to see sales as creating nexus?
Yeah.
Yeah, doesn't make any sense. So I think all the states that use sales either wholly or predominantly will start to use Wayfair as an excuse to go to economic nexus. May not increase their tax collections at all, but it'll certainly increase the number of returns they get.
Absolutely. So, a lot of people are talking about prospective enforcement. I saw an article in Accounting Today, and, people are accusing California of going backwards, but that's going backwards for physical presence. Yeah. But some states like Maine are going back to the first date that their economic nexus became effective. Like that's July 1st, 2018, and they're going backwards at this point. So what we're telling people is, when these laws become effective, you've got no past exposure unless you have some sort of physical presence. And why in the world are you going to wait and let all of this past exposure build? If you've got potential exposure, be proactive. Don't wait for a state to find you. Is Avalara saying anything different, or what's their position on this?
We're not giving people tax advice. We count on you to do that. But the states aren't really going to have much choice. In the early days of a new tax or a big change in a tax, states, the Department of Revenue have a fair amount of political latitude. And it's political latitude. It's not legal latitude. It's political latitude to slow walk enforcement. But after a certain period of time, the legislature or the governors are going to say, how's this, I invested a lot of political capital getting this law changed, and, we're going to spend that money. How are you guys doing collecting that money? And when that call comes in, that Department of Revenue is stuck. At that point in time, slow walking ends, and they start to look for people. And at that point, one of the problems with tax administration is somebody always follows the law. Somebody, it looks at the law and said, "Oh, that's me," and they follow it. So you're a tax commissioner and you're sitting there. You think, okay, well, I'm gonna start really enforcing this thing, on March 1st, and it gets in the newspaper, and all those people that started a year ago, they're saying, "Huh? So why did I bother to do this last year?" And then they call their legislator, they call the governor. Tax commissioner's in trouble. Tax commissioner then has to start going backwards. At that point in time, the tax commissioner says, okay, on March 1st, I'm going to really get aggressive on this, but I have to go back to the beginning of time. I don't have any choice. That's what the law says. And this will be the year that happens. South Dakota's governor is already in her budget. She's giving them new, I think she called them agents, whose only job is to find remote sellers. The Kentucky governor just released his budget last week. He's going to double the number of auditors in the Kentucky Department of Revenue.
Yeah, and that's what we're telling people. We're saying, hey, number one, when you do a registration in South Dakota now, they pretty much make you, prove that you didn't have Nexus as of November 1st of 2018. And if you can't, they make you go backwards. Maine's letting you get registered, but then they're auditing you. Those are the two most aggressive states, but we're starting to see other states, just like you're saying, and we think the next 18 months is going to be a bloodbath. And the problem is, while these states, this is what I believe, while they're primarily looking for economic nexus, they're going to stumble across all types of nexus.
Yeah, it concerns me. I mean, I tell people that all the time. I said, you might get a bit of a free ride if all you've got is economic nexus, but if they ask you the right question or you answer the right question the wrong way, physical presence is a guaranteed automatic look back.
Yeah, absolutely.
Automatic.
So, Scott, you have any, parting wisdom for, what people should be doing?
Well, thank you, Mike. I appreciate the time today. It's critical that folks listen to their trusted advisors. I mean, there is no, if you call the state's going to tell you what the law is, and that's it. Mm-hmm. You got to call your trusted advisor and ask them, okay, the law, tell me what the law is and tell me what I need to do to become compliant. Because the state's answer is going to be very simple. This is what you have to do. You have the opportunity to give them some advice. Maybe there's some planning that can happen. Maybe there's some ways to mitigate the past. Maybe you've got relationships you can use. The states have none of that. They have what they have, and they have the law. And when you work in a Department of Revenue, the law becomes it's your friend, because it keeps you from having to feel bad about having very bad news for people.
Absolutely.
And they use it all the time. So it's important. People need to take this issue seriously. Every month that goes by is a month of taxes that they owe that they could have collected from their customer.
Excellent point there. I mean, that's so important, and it's getting old. I mean, we're coming up on 18 months in some of these states. I mean, some of the bigger states may have been just last November, but other states have been since July 1st of 2018. And that's what gets me the most is why let this continue to grow. So I thank you for sharing that bit of information. One thing that we say too is, especially for smaller sellers, just because a state says you should do something doesn't mean it makes good business sense. So until we get some relief for these smaller sellers, I say we got to use common sense. If you're selling $205 items, you got $1,000 worth of sales, and you owe $60 in tax. Let the state come and find you. I mean, my hand gets slapped. We do webinars, and I have auditors on those webinars, and they'll say, "You can't tell people that." Well, why not? Chase them down. They'll be better off in the long run. So
$60 in tax plus 12% interest and a $10 penalty. Yeah.
Even 5 years later, you're still doing better by letting the state track you down. So I think that we need to use some common sense when we're deciding whether we should do this. But like you were saying, if you do have material exposure, the time to act is now. Don't wait any longer.
No, like I said, every month. And I mean, it's not every day, but every month's a problem. Just makes your problem deeper.
Absolutely. So Scott, if someone wants to follow up with you or learn more information about Avalara, what's the best way to do so?
Well, it's a couple different ways. If they want to talk to me, it's scott.peterson@avalara.com. Happy to talk to people. I like talking to businesses. I learn things that I then turn around and use to teach other people, because I do a lot of teaching. Our website is really good. Avalara.com, great website. We have lots of different products. We have a really good chat system on that website if you just want to go out there and chat with the computer for a while. But we can get you into the queue and get you talking to a salesperson. Explain it out. Explain how the Streamlined sales tax works. In the pricing, because that system, frankly, is really good when it comes to offsetting some of the cost that goes along with this. And then because this isn't a kind of a concept where you can it's not like plugging your computer in or plugging your phone in and having the battery start charging automatically. It takes a little time to get, a retailer's sales system to talk to the Avalara tax engine and have that turn into a return that gets filed at the end of the month. It takes a little time to go through that process. So the sooner they can get talking to us or one of our competitors, the sooner they're going to be compliant.
Absolutely. And we can help with that also, Scott. I mean, we have a lot of services that are complementary that, support a lot of the services you do. That's why we've had a relationship for so many years, because our clients need the products and tools that Avalara does offer. So I want to really thank you for taking the time today. This has been great. And you're welcome to come back. We'd love to have you again when it's time for an update. But as of this point, I want to say thanks for being here, and I want to thank all of our listeners for tuning in.
Thank you very much, Mike. Appreciate it.
You're welcome, Scott. Take care, everyone.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.